Before starting the video, remember, this is not a financial advice. How the war between Russia and Ukraine is affecting Bitcoin's price. Hey fam, welcome back to our channel and welcome back to yet another video for you all. As you might already have guessed from the title, we are going to be looking into the impact of Russia-Ukraine war has on cryptocurrency and how you should be dealing with the situation. Before we begin, however, we would like to show solidarity towards the Ukrainian people. Stay safe during these testing times. While you may think of it as absurd, these wars do have a huge impact on both stocks and the crypto market. In fact, just in 24 hours, the global crypto market cap went as low as $1.57 trillion, losing almost 9.66%. When Russia launched a missile attack on different cities in Ukraine, Bitcoin fell as low as $34,324. Similarly, this impacted other small coins including Ether, which fell by as much as 10.8%. According to Coinmarketcap data, more than $150 billion, 133.64 billion euro, had been wiped off the entire cryptocurrency market in 24 hours just a few days ago. Now, in response to this activity by the Russians, the United States of America and its allies decided to impose severe sanctions on the oppressing country. This was confirmed by President Joe Biden and Joseph Borrell, the EU Foreign Affairs Chief. The financial sanctions are to be the toughest ever imposed on Russia. Well, this was naturally bound to have an impact on stocks. That's right, global stocks divided, and gold, oil, and dollar prices rose rapidly. Only European stocks alone rose by 2.6%. Crazy, right? Recently, oil prices have leapt around 4%. As for the U.S., West Texas Intermediate crude futures were 4.5% higher at $95.71 per barrel in Asia trade. Similarly, it is expected that if the controversy continues, gold too can hit $2,000 an ounce. Gold prices are expected to trade higher this week. Just today, at 9:02 a.m. Dubai time, the metal traded at $1,911.47 an ounce. This is nearly 6% more than it was a month ago. On to stocks, which are perhaps one of the most important things affecting cryptocurrency. This video is sponsored by BlockFi. BlockFi is an exchange where you can trade cryptocurrency. Apart from earning interest on your crypto, you can take out loans as well. Moreover, it allows you to earn 8% annually on your crypto reserves, which is 8 times the best savings account out there. So, what are you waiting for? Sign up now by clicking the link in the description. Okay, let's continue with our video. Wars in the past have seen a pattern over the years. As for the Vietnam War, although it was quite an unpopular one in the history of the U.S., stocks grew anyways. In fact, just from 1965 to 1973, when the troops left, the stock market witnessed a staggering 43% growth. This amounts to around 5% per year. Similar was the case in the Gulf War that stretched over from August 1990 to February 1991. Over this short span, S&P 500 index gained 3.2%. Moving on to the Iraq War, it was seen that when the U.S. invaded the country in 2003, stocks jumped 2.3%. Towards the end of that year, all markets grew by 30%. Another quite old example is the Crimean War that was fought from October 5, 1853 to March 20, 1856. That, too, involved Russia against France's alliance, including the mighty Ottomans and the United Kingdom. After the dip, stocks went up again. Perhaps the only exception to this ingenious trend was the war in Afghanistan. Other than that, it is kind of typical to see wars having an impact on the market. In fact, during the last 6 wars that involved the U.S., it was seen that the stock market rose in the 10 years following the initiation of the conflict. Perhaps the most statistically appealing examples to quote in this regard are World War II and the Gulf War, where in the 10-year period that followed from 1939 to 1949 after World War II, markets only doubled. In the Gulf War, however, from 1990 to 2000, a 500% increase was witnessed. So, is the market going to crash? The answer to that is, we don't know. Neither does anybody else. But if the past trends are studied and looked upon, it definitely feels like the dip should be a rather buying opportunity. Should you perhaps draw out all your funds and wait until things settle down? Well, no, of course not. You should continue with your plans as they were before. The same goes for cryptocurrency, which has been closely following stocks. Be patient. Bitcoin will rise. Don't panic sell at all. It's just another way of quitting and giving up. Do you agree? What will be your course of action? Do you think the Bitcoin price is going to rise soon enough? Let us know in the comments down below. Don't forget to subscribe to our channel and press the bell icon so that you never miss out on any uploads we make. Believe us, it's gonna help a lot. Stay tuned for more amazing stuff that is to come in the future. Till then, take care, and we will see you all soon. Peace.